Hello, everybody. Welcome to MX Talks once again. Just to introduce myself, I'm Dion, and with me, the guy you just heard is Shin, and we will be your co-hosts for today. I'm sure everyone has heard about the SEC allegations against Binance and Coinbase. So today we really want to talk about it and break down how this situation might affect the DeFi space, which is the space that MarginX we are in. So actually, I wanted to ask Shin, do you have any initial thoughts about this?
Yeah, I do. I think this whatever that's happening with the SEC suing Binance and Coinbase, it brings back a lot of memories about is this what happens half a year ago, and like people think is this going to be another FTX incident, or is it just going to be another FUD, right? So I think it has got a lot of people anxious, and we've seen a lot of funds being withdrawn just over the weekend, but we'll let the speakers give you a deeper dive on this thing. So I'll just stop here. But before we introduce our guest speakers, Dion, do you want to briefly tell us what MarginX is?
Sure. Okay, so MarginX is a Cosmos-based DEX built on the FunctionX network. And it is the trendiest DEX by degens for degens. We've recently listed the perpetual contracts for the latest trending tokens like FERC and ORDI. You know those tokens that you guys are trading. And we'll be listing even more in the upcoming weeks. So for more information, just visit MarginX.io.
Right. Thank you. Thanks, Shin. Thanks, Dion, for that introduction. Now, with that, let's begin our discussion today. Right. First, we'll let our speakers introduce themselves. Right. Tell us a bit what you do, how long you've been in the space, and anything else you would like to add. Right. How about we start with you, Jamie?
Yeah, I'd love to. So my name is Jamie, and you might have seen my crypto videos on multiple crypto channels. Before, I used to host for Box Mining quite a lot. I hosted for him for 2 years, and right now sometimes you might see my face on Coin Insider, and I do have other crypto channels like it's called Jam Crypto or Crypto Gems as well. And I'll usually do in English content, but I would say the past half a year, I'm trying to do more Cantonese stuff. So I'll do radio stuff in Hong Kong, and then I'll also do TV appearances, and then I'll explain to the public what blockchain and what crypto is in an easy to understand way.
Great. Yeah. Invite me over as well. 我都識講廣東話少少啊。
可以。
Oh my gosh. Thanks, Jeremy. I don't know Canto, but I think it's really interesting because I think you're the first Cantonese speaker on our Twitter space.
Oh, I'm honored to be the first Hong Kongese on here. Or if you any of the listeners speak Cantonese, just let me know in the comment.
Yeah, or you guys can request to speak anytime, and we can have a lively discussion. But anyway, let's move on. Another speaker we have with us today is Mu from Kami. Mu, could you please introduce yourself?
Sure thing. Hi, everybody. Thanks for having me here. I can't say the same in Cantonese, so I'm going to leave that off the table for a second. Although I am surrounded by a lot of people who do. I've been in the space since about 2016. This originally began as more of an academic exercise than anything else. I began researching Bitcoin, as a technology to use it for something completely different. But, let's just abbreviate that by saying that I got swallowed, by the rabbit hole. Still here since then, began building in the space about a year and a half ago. I'm a founder at Kami, where we're building basically a lifestyle hub for Web3, right? We're basically building a place where you can live your entire Web3 lifestyle in, basically trading, participating socially, and using NFT assets, right? So it's a very utility-focused project that's designed to be a really easy experience for the lay person to use, right? We are aiming for the mainstream with that. Well, back to the topic at hand today. I mean, having been in the space for a bit, I've seen, the birth of DeFi, dabbled in it 1.0, 2.0, and into the current era as well. So not claiming to be an expert of any kind, but as a user and a participant, I suppose, my commentary today will be from that perspective.
Sure, thanks. Out of curiosity, can I know what's the origin of the name Kami? Is it like the word God in Japan, or is it like in the word Malay, which means we? Or
Perfect. Excellent question. It's and you got half of it already correct. So it has the source of the thinking behind the name comes from the word paper, right? Which is origami, right? So the older word apparently was kami, and pronounced that way. So we love that idea of a blank piece of paper because it represents possibility and endless potential. And that's something that we are trying to do with the platform. So it really represents that. We're giving people a set of tools that they can use in sort of any sort of way, or, that they prefer. They can make their own recipes out of the tools that we provide them to be able to build NFT-based businesses. All right, so it's meant to represent that sort of like endless possibility that of a blank piece of paper, right? When you have inspiration, and the secondary, and I'd say probably equally important meaning here is that it's we, right? Which is where the definition of community in Web3. So we think that those two things coming together were quite poetic, hence the name.
Nice, cool. Yeah, so you know what? That's great introduction from both our speakers. I would just like to dive into our topic today. So Dion briefly mentioned at the beginning of our Twitter space, we're going to talk about Binance and Coinbase, in hot water with SEC, being sued by SEC for trading their being an exchange, whether they're trading securities or is it a commodity, and all these definitions. So I personally feel it's a bit of a big mess right there. But I just want to hear maybe from both of you, what are your thoughts on this, and maybe give a bit of a background to the audience as well. Well, I would think everyone in the audience would have heard of what has happened with Coinbase and Binance, but just in case, why don't give a bit of a background and your thoughts on this?
Yeah. So basically, SEC is filing this lawsuit against Binance and Coinbase, especially for Binance. The allegation is so much more serious compared to Coinbase, because Coinbase, they are just like being alleged as selling securities on the exchange, but Binance actually got 13 charges from the SEC, along with selling unregistered tokens like BNB and BUSD, and CC, who is the CEO of Binance, basically being alleged of allowing high-value US customers to continue access to Binance.com instead of Binance US through VPN. And there's also funds with Binance US and Binance.com. Well, behind closed doors, I don't know if this actually happened because because we are out in the public and everything is happening behind. So I would say Coinbase is more innocent here, because Coinbase has asked for regulations from the SEC, what could have been done, and not to mention as Coinbase is a listed company, and back in 2021, SEC actually approved its IPO. Yet in 2023, all of a sudden, SEC is pulling an 180 on Coinbase. So I don't think that is fair as well. That is just like a little bit of background, and do let me know what you guys think.
Those are good points, I think. Before I chip in as well, do you have anything else to add on?
Or maybe Moo, if you have anything to add.
I suppose, from my POV, I'd say the intent is much more of an interesting question. Without getting into the granular, like what exactly Binance and Coinbase are being sued for. Those are technicalities more than anything else, serving a larger purpose. And the most interesting question, I suppose, is why? Why are they doing this, right? And it clearly centers around the definition of securities, right? And if the SEC is successful in defining it in their terms, that gives them control over anything that's defined as a security as traded by these exchanges. And it looks to me that that's the real goal here, right? They want to be able to regulate the exchanges more than anything else. And in order to do that, they first need to redefine the security so that they have the regulatory and legal purview to be able to dominate in that area. It's almost like a turf war.
Yeah, that's what I feel is unfair, because how SEC defines securities, they're using the Howey test, which is which is back in the 40s or something, and internet was not even, we didn't even have internet back then. So I would say why they are doing this is more like I'm guessing Gary Gensler is a Elizabeth puppet. And because back in the days, he understood crypto and blockchain really well. He was teaching about crypto at MIT. He mentioned specifically that Bitcoin Cash, Litecoin, Ethereum, those are not securities. He gave a very clear definition. Yeah, so all of a sudden, 2023, he's pulling a 180. I don't know if he saw like a light from the US government, or he's being brainwashed from the US government. But my guess is this order, that this regulation is coming from the top. Let me know what you guys reckon.
Yes, it's a good point that you brought up the Howey test, right? So for those of you who have following through the space, I tend to be a bit of a devil's advocate. I don't mean to piss anyone off, but so I just want to challenge it, right? Like I actually do agree, because I'm in the blockchain space as well. So I actually agree with what Jamie has said. But putting myself in Elizabeth Warren's shoes, she might argue that securities is about because you're raising funds by issuing those tokens, right? So it's almost like shares where they are representative of how well you're doing, and people putting money there is actually supporting you. And so this has to be, and also because what happened to FTX has made people lost millions of dollars, so it has to be regulated. So I just want to, but you correctly pointed out how Howey test is kind of like outdated. It was like decades ago before all this internet thing has happened. So I just want to hear that why. How do you think we can better regulate it? Or if you don't think it should be Howey test, then what should it be? How should we modify Howey test such that it's more relevant and modern?
Well, I think we do need regulation at the end of the day. Well, me speaking as a crypto person, I'm sure this is, we'll have a debate in the crypto community, but the truth is, in order for mass adoption to happen, we need some sort of regulation, someone who actually know this place and how to regulate this space. Like in terms of instead of the Howey test, what sort of regulation should be replaced? I honestly don't know because I'm not a regulator, but I think we need some sort of rules to protect the general public, because honestly speaking, the general public is not ready to take custody. They still rely on banks, because most of the time we tend not to trust ourselves, and it's always been the way we are educated. Like 5% of the money should always go to the saving account in your banks, and we tend to rely on these centralized authority. So if we need general public to get into this space, we need some sort of regulation. But what the US is doing right now is basically driving all this innovation to other countries. Like even China is more open than US right now, because back in 2017, China was the one who banned crypto, yet China is being more open than the US. This is the part I find really ridiculous.
Yeah, it's kind of funny, isn't it? Like it's like it shifts every few years, right? 2 years ago, now China wasn't that friendly, and then US like soaking up all this companies that's driven off from the Chinese soil, and then now the reverse is happening. China being aggressive, attracting a lot of the crypto companies to Hong Kong, and then US is driving them away to somewhere else. So yeah, it's kind of funny that this is happening.
Yeah, I mean, okay. Well, thanks so much, Jamie, for sharing your opinion on how, even though the SEC seems really hard on the crackdowns, but we still need some form of regulation, maybe just, to discuss and decide what kind of regulation is best. That is the question, right? So I want to just take this time to turn our attention to another thing that we want to be talking about today, which is the DeFi portion. I want to help our audience understand what DeFi is all about and why it's making waves in the finance world. Why is it so important? Maybe Mu, can you give us a bit of a breakdown of what DeFi is?
Well, my sort of simple way of describing that would be everything that you see being done in the banking and finance industry being done in software, right? We remove the human beings out of the processes. We create software to replace those processes, and once we do that, we actually open up, the possibilities exponentially would even be an understatement, I'd say, because within the DeFi space, when you automate these functions and when you see how functionality has been developed in terms of put on a per platform basis, what each platform does, it is very, very flexible, right? You can concoct recipes from these things in a modular way, right? By plugging one thing into the next. And, hence the sort of popular mental model of a money Lego, right? And that's to me, the tremendous appeal of DeFi, because it removes so many inefficiencies. It speeds everything up. I mean, the moment you've taken out a loan on Aave, you probably never want to take out a loan in the real world anymore, right? You can get it done in 20 seconds, right? Without any sort of paperwork. So hence the appeal and the power of DeFi. Maybe this has some bearing on what's going on with what's going on in the SEC and US regulation and whatnot, because the big difference between China and the US, I mean, they're playing this game of musical chairs now, and part of that is like defining what the hell is a security, and even within that, it is a very, very sort of risky play, right? Because every change you make to the definition of what you call a security will impact other things, right? Because there are many other things of value that are being traded that might end up being redefined as securities. Even collectibles might wind up being securities. Baseball cards might be treated as securities. So that's the sort of the gap here, right? And I'm sorry for going back to that earlier point, but I think that has a huge impact on regulation. And when we talk about, the difference between what's going on in China now, China's opening up, the US looks like they are closing down on this. But between the two, the one that can impact regulation in the most deep way would be the US, because it is the international currency of trade, right? And in somewhere in there, it's likely that they are protecting the US dollar and US financial institutions, however misguided it may come across as, but they have the greatest amount of influence from a regulatory perspective. And if they set the pace for regulation, that will heavily impact everything else that goes on in DeFi. I'll stop there for a second. I could go on all day.
Yeah, no, do go on.
It's a sleuthing sort of game, right?
Yeah.
That we're all playing right now, right? We're all trying to figure out how the jigsaw puzzle works. Part of that thinking then is within the U.S. domestic economy, what's going on, right? You've got the boomers who held, the greatest sort of portion of wealth collectively, but then we moved into the millennials. Even the millennials are in their 30s right now, so they're not even like the new entrants to investment, right? And then you have the next upcoming generation, Gen Z, and Gen Z is all digital, right? They were born, into this world, and they know what they want. They understand this stuff. So when they have to make a choice, they choose independence, they choose freedom, they choose control. And where would that be? That would be in the realm of crypto and blockchain and DeFi, right? They get this stuff. So if the US does not step in now and grab control of the next generation and redirect them back to traditional finance, then hey, this maybe could pose a problem for them down the line, right? So there is sort of maybe in the back of my mind, I'm wondering about whether or not this could be a play in that direction.
Yeah,
what do you guys think?
Yeah, I think that's a good point. And I back to the topic about the regulation. I think what's going to happen is that in the past, some of us in the space, we were actually waiting for them to regulate us, right? We were saying that actually regulation is good because we know to a certain point, for a long time, we have been in a gray area, and we always thought that when we're big enough for people to notice us and make regulation about us, it's actually kind of a good. So the only question is, how would they regulate us, right? Like, I really believe that if they don't kill us, we'll come out stronger, right? The only worry we have now is that they go over the board and they just literally kill all the innovations that that's happening right now in the space. So I guess in the blockchain sphere, I think that's our main worry, right? I don't know, Jamie, do you have anything to add on to this topic before we move on to the next?
Yeah. So what Jin you just said, I think personally, I don't think DeFi and regulation you can tie those things together, because I'm not sure how you can implement it on DeFi, especially like KYC. Like, how can you do it on DeFi? Because there's no way. It's really decentralized. Just like how MetaMask said that they try to, take users' information, KYC for tax purposes for the US, but you'll realize you can't do it. Like, MetaMask can only take your IP address or which button you click or which tab that you tend to stay for longer, for how many seconds, etc. But you can't tie your wallet address to who that person is. And I think is the same case when it comes to DeFi. So I would say regulation is more heavily affected to centralized exchanges just like Coinbase and Binance, and I would say especially in the US right now compared to other countries like East Asia or even Europe. So I'm not quite sure how you could implement it. That is my point.
Well, I suppose there's a difference between a technical implementation and a financial implementation of the same thing, right? With regulation, I mean, it's in the name, right? They're calling it Operation Choke Point, and while they cannot access the technical sort of controls for this, right, because the technology itself isn't really geared in that way. They go for the human side of the equation, right? So if you tell your entire nation that it's bad, you cannot invest, it is dangerous, we will not allow you to, and then begin cutting off bank accounts and banks that are friendly to crypto, that on a social level already impacts the industry, right? So it's a question of finding that pressure point and being able to put pressure on it.
Yeah, but I think you can't really stop peer-to-peer transactions. You might make on on-ramp or off-ramp more difficult, but you can't, like, regulations can't truly stop decentralization.
Of course, yeah. I don't think it'll nuke decentralization per se, but it's just the scale of people coming in and the scale of adoption is going to be impacted by it, right?
Yeah, definitely. Because my point of view is that initially, back in the days, we experienced the first rally in Bitcoin. It was from like individuals users, and then the next trend, next rally we spot again, it was from institutions. And I believe the next rally that we will see in the future will come from countries' adoptions. It's slowly happening right now. It's just not. US is not adopting to at least to the public, but I'm not sure behind closed doors if the US is really so against Bitcoin, because if you look at the numbers, US government has the most Bitcoin other than Satoshi Nakamoto or exchanges.
Yeah, I think that's a good point. I think behind the scene, every big country in the world, they have secretly at least developed the tools to do that, right? And with CBDCs coming out, I mean, they have. It's just CBDC is probably just one of their tools. I firmly believe they have a lot more behind closed doors that they're preparing to for the wide adoption of crypto. I mean, I used to work in a payments industries, and when QR code payments came by, I remember like everyone was talking about like, yeah, we'll get all the technology ready, but we'll just let WeChat do it and see how well they do. And if WeChat succeed, then we'll just open our technology, right? They'll just take a wait and see approach. Basically, I think that's what the US government is doing, right? They'll just take a wait and see approach. They'll probe us a bit. I mean, after all, I mean, however big the blockchain market is to us, it's still a fraction of the trade fi. So I think I think what Jeremy says is absolutely right. Behind closed scenes, they're just taking a wait and see approach and wait for all these innovators to come in, and when it's stable enough, widely adopted enough, then you come out of the doors and say that, haha, actually, you know what, we've been preparing this for 20 years. Here's the thing, do it, use it, or whatever.
Yeah, definitely. That's how US has always operated.
Yeah, and I think the previous conversation very nicely is a good segue to actually my next question, right? Because you talk about the background of this SEC and Binance and Coinbase issue. You guys talk about the impact. So I really want to deep dive a bit on the impact. Like, do you guys think it's just a FUD? It's just a temporary thing. It's going to go over, or do you think this is going to be protracted, or even like to the other extreme end of this question would be it'll be a nail in the coffin, and it'll be hard for Coinbase or Bitcoin to recover?
I think that's. Sorry, go ahead, Jen.
Okay. I think the worst could happen just for Binance and Coinbase is just they leave the US market. Coinbase is looking to move to other countries like Canada, and the same go with Binance. Because if you look at the Ripple case against the SEC, if Ripple can get it done, get fined for $200 million, Binance has like at least 10x more than that money. Binance has the top tier legal team working for the company. So the most probable guess, I would say scenario number one is Binance pay a huge fine, like billions of dollars, and make the whole thing go away and make SEC shut up for a while. Or scenario number two, Binance US just leave the country, but we still have Binance.com, which is a global thing. So I feel like the whole thing is more like a fund. And if BNB is keep crashing, then personally, I'm going to buy more, honestly speaking.
That's a good way to close that. I don't know. My thoughts actually are more about the sort of will to complete this, right? I mean, Gensler is it sounds like a precarious or fairly precarious position with the SEC stabilization bill being proposed and things like that happening already. But there are more practical aspects of this, right? The amount of time required for this to occur, as well as the cost involved. I mean, even with the Ripple case, they've already, just legal fees alone, I hear from on the Ripple side, amounts to about $200 million so far. All right. So it's a race to the finish line, right? Okay, who's going to be able to spend more? The SEC's budget, as I understand, is about $365 million. Gensler is asking for an increase of $46 million to complete his mission. Some are arguing that this is a last-ditch effort to position himself in crypto before he gets knocked off his seat. So if he does, then the question is, what would the next sort of change in policy be? If I had to wager a guess, I'd say this would fizzle out. Once he's gone, this disappears.
Right. So, I mean, whether it's a fad or whether it will continue, I mean, we won't know. But yeah, thanks for giving us a bit of an idea about what's been happening in the past and also what this could be. I guess no matter what, we kind of want to know, with this crackdown, right? Do you think the crackdown could open some doors for DeFi projects? I mean, especially at the moment, right? Since it's happening, what do you think the initial impact on the DeFi space is? Either one of you, Jamie or Mu, you can come in to share your thoughts.
Yeah, I will say yes and no, because we are in ultra crypto winter right now, and I will say people who are still remaining in this space, those are really hardcore people, and they believe into this technology, believe into crypto is the future of finance. So when they see centralized exchanges being cracked down, I do think they realize, okay, centralized exchanges are very convenient, but at the end of the day, I should take custody. I should use crypto wallet. I should send it to actually if I want to do trading, I should go to DeFi, etc. But when I say no, is people on the outside who is not already in the crypto world might see this as a red flag. Oh, it's being targeted by central authorities, by the government. So they might got scared and not even willing to touch CeFi or DeFi. So I will say a little bit of both. Let me know what you think, Mu.
Very, very interesting question. I mean, I agree that there's a lower number of participants in the market, and those who remain, by definition, would be people who are already familiar with the space, a bit more knowledgeable. They've gotten through the learning curve of entering the space, and hopefully, to some extent, understanding the risks involved. But to me, the most valuable part of all of this is increased adoption, right? More people using these services is where the true scale is. So if we're going to see growth, it's not going to happen within the existing number of people. It has to come from new participants. And for new participants to come in, these are factors that affect them, right? One is public perception. The other thing is, and this spans all across Web3, not just in DeFi, is that onboarding friction, right? Getting into the space is tricky. Most people are discouraged by the onboarding. It's like, oh, how does it work? What does the token, gas fees, all that stuff, right? They get lost in there. So we shouldn't sort of exclude that from what we are looking at when we are talking about the differences between centralized exchanges and DEXs as well, because to use a DEX with current onboarding technologies or processes, you need to cross through that learning curve, right? So foreseeably, on the more obvious point, it would be easier to use a centralized exchange. So if I'm new, I'll probably gravitate towards a centralized exchange and enjoy a sort of simpler UX. Once I get more fluent, then I cross over. All right, that's the way I think the process would work. So it's difficult to tell how much impact it's going to have, because it's happening in the US, right? And we're all living in that crypto bubble. So to us, it's huge noise, right? It's a big deal. We see it every day, right? But for the average Joe, they may not even know anything like this is even going on in the first place, right? So that's another thing to note.
Yeah, that is a good point indeed. Well, I don't think centralized exchange being scrutinized is enough to push average people into the space. But I do think what happened in the past two months, like banking crisis, multiple banks are failing, and people need to feel the urgencies to withdraw after the banks. Some of them, of course, those funds would go to bigger banks. But I do believe once people withdraw those money, you need to park those funds, and a portion of that would go to crypto, and that might speed up mass adoption because of banking failure.
Yeah, can I chip in a little bit on this? I really agree on the last point that Mu mentioned, and as well as what Jeremy has just mentioned. I think I don't know if it's just me, but I noticed that sometimes when the TradeFi world is doing well, then it's almost like people is taking money out of the crypto world, and then just like last few weeks the stocks were like booming, and it's as though people is selling Bitcoin, getting the funds out from the blockchain, from the crypto world, and then put it in a TradeFi world. And likewise, during the banking crisis, when the stock tanked, it's as though people are selling all the stocks, and then they shift all the funds towards the crypto world. So to Jeremy's point, I think I do not know this for sure. I'm not backing this statement up with facts, but certainly from just my own personal observation, that certainly seems like it's a very that's what's happening. And my view on this thing, I've got my own opinion. My view is that I generally split this problem into two simple parts. One is those people who are not yet with us, not yet in the blockchain or the crypto or the Web3 world. So for those people to join us, there's a lot of onboarding. There's a lot of barriers, as Mu has mentioned. And during the ultra winter, I think the confidence is very low. They find very little motivation to join us. And I think that is the part that we just have to wait it out. But there's a second bit of people who is already well versed in the blockchain world, and there are funds there, and it's just funds moving between the blockchain people, and these are the people who is taking the funds out from Bitcoin to the stocks, and then stocks back to Bitcoin again, and I think these are the people where things like what happened to Binance and Coinbase, these are the people who actually exploit. I don't know whether exploit is the right word, but take on this opportunity to find more projects, to find out to actually find more interesting stuff to do within the blockchain sphere. So I think there are two very distinctly different driving forces when this news break out in the blockchain world. That's my just to chip in my opinion on this.
Yeah, I mean, following up on that, right? I guess like there are many schools of thought. What is kind of most important to us, because we are like pushing through this bear market, is how then can DeFi projects use this situation to build their business, to draw in more users. When there is so much noise, it can be quite difficult. And what do you think is the best way for us to build right now? Maybe Mu, you can share with us first, since your mic is on.
I don't know. I suppose the reflex answer would be heads down, right? You just keep going, build the functionality out, focus on the things that you're going to need for when the crowd shows up again. I think that's the attitude that all of us generally, across the space are taking right now, because it's so difficult to predict what's going on, right, between one event and the next. And anyone who's been through a few cycles knows how the number of participants changes so quickly, right, between a bull and a bear. So bear markets are for building, I mean, it's cliche and all that, but I figure there's a lot of truth to that. And kind of back to what I was saying earlier as well, if we really want adoption, we need to make it easy for people to use the stuff that we build.
That's, I mean, the friction is really something that even I experience as a user. And for sure, like what you're saying as a founder is very valuable. For Jamie, how about your perspective? I mean, like as a content creator, what do you see from your side of the industry that maybe people could do more of to kind of like promote the DeFi space? And
Well, I kind of want to go back to what Mu said. We need to make everything like the onboarding for newbies extremely easy. Otherwise, they're not going to come. Mass adoption is not going to happen. Because think about it, like when we Google searching something, we wouldn't think like, okay, so how the internet works, so how does the search engine works? That we just do it, right? And this is what you call mass adoption. And if you have to consistently think about, this wallet is on blah blah chain, this wallet is on blah blah chain, then average folks is not going to come. And I think for crypto to really tackle this problem, you have to make the whole thing more convenient. That's my point.
Yeah, I think that's a good point. I mean, I still remember the first day when I joined the so-called blockchain sphere. I got really dumbfounded by exactly what you just mentioned. Like, I actually need to do bridging. I need to it's not the same. I have to pay gas fee for this. Like, before I even did my first thing on blockchain, I probably already paid a couple of dollars, like tens or maybe more than that dollars on gas fees, just to try to figure things out. So I think there must be some sort of like minimum threshold of motivation, if I could put it that way, for people to get on board, right? Like, because if you have just a bit of motivation, you get put off by it very quickly. It's like, oh gosh, this is so terrible, and you just move on with that. So yeah, I think that's a very good point. I think that's what everyone is trying very hard to do now. But to Moo's point as well, like during the winter, all we can do is just put our heads down and just work very hard and build, and just keep on building till the winter is over. Sorry, Moo, did you want to add anything, or okay? Probably.
Oh no, I mean, I'm started thinking about other things as well, like beyond just building in the bear, right? One of the questions that's on my mind these days, well, I'll start with the first part. First part is like just DeFi in itself is pretty complex, right? I mean, if you don't know anything and you're new to this, figuring out where to start is very difficult, right? And here you are, you're risking your money, right? You've got to know, okay, I'm gonna put it here because I want to make some money. It's very difficult for you to understand even how risky it is, right? Yield farming, the staking, LPs, all of that stuff, right? So that's something that I feel is kind of hindering the development of the space. So you get a lot of experts who are very good at this stuff, and then there's this big gap, and then you have everyone else, right? And that is the first part of the equation, right? For me, whereas it's unclear how all of this is forming. I mean, clearly it's progressing in the correct direction, right? That people are recognizing this as an issue, addressing it, seeking to make it more familiar. But that element of familiarity and education, I don't see this happening on a widespread basis, right? Easier way to put it is like someone to hold your hand, right? And help you learn without losing too much money along the way. The other thing is that all across Web3, we've seen a shift in culture, right? This began as really, the whole Nakamoto white paper, all decentralized, right? And, you had the first wave, ICOs, right? And why did people have ICOs? Because they couldn't do IPOs, right? This is a way of listing something, raising money without having to go through the usual rigmarole with the legal paperwork and entities involved and all that sort of stuff. You raise the money, you build this whole new thing, which is all about decentralization. Hurrah, right? That's the ideal, the utopia that it began with, or the utopian ideal that it began with. But as people recognize the potential of the technology, different players entered the space, right? More traditional players began to enter the space, invest in the space, build technology, and own technology within the space. So you've got, well, simplistically speaking, you've got these two different cultures now, right? You've got the traditional money, the VC money, and you've got the decentralized culture, which is, we're cypherpunks, we want independence, we want decentralization, right? Just loosely speaking, it's these two categories, right? So in there, you have the term DeFi, right? Decentralized finance, right? And again, it's decentralization. But how much of DeFi is actually decentralized, right? It's a function of ownership of these platforms, control and management of these platforms, right? And that's where it's also fuzzy at this point. Some are very decentralized, even to the extreme where it's anonymous developers, it's all code, and so on. Right, and then you have the blends of a little bit of control, a little bit of ownership, and so on as we go. And the main topic of today's thing is regulation and how this is all going to work, right? So enforcement of regulation is going to boil down to that, right? You cannot enforce code, right, onto an anonymous thing where there is no control party, there is only code, there is no ownership, and so on and so forth. But if you go to the other extreme, there are beneficial owners that can be tracked down, also operating under the banner of decentralized finance. So how would we define what is truly something that can or cannot be regulated, right? Those that are purely decentralized, fine. I can see that being left out of the space, right? But ironically, I mean, we may have decentralized finance, but to this day, there is no fully decentralized wallet, even as an example. So there are all these infrastructural gaps that exist that prevent us from going to the extreme of self-custody. Everything is you're self-sovereign, not your keys, not your crypto, and so on the one hand. And then on the other hand, where you're going to have to compromise stuff for the sake of adoption, and the people who fund this are known parties, right? So forgive me if I'm kind of like broadening the topic a little too much, but within the context of today's discussion, I think that's very, very interesting. I'm really wondering about this. So it's not like I have answers, but these are the questions that are kind of rolling around in my mind. And I'd love to hear what you guys think about these things.
Yeah, I think that's a very good point. I think I really like that point you made. Last year when we were at the Singapore FinTech Festival, MarginX, we were there. We were showcasing DEX MarginX, and we were explaining to a lot of people. And we started to realize that because we were saying that this is a DEX, right? MarginX is a DEX, a decentralized exchange. We then realized that everyone is calling themselves a DEX, a decentralized exchange. Mm-hmm. And then after a while, what I realized is that every service or product that you're going to put out there, there are a lot of components to it, right? Like I'll take an exchange, for example, because I'm more familiar with that. You have your settlement engine, you have your wallets, you have your matching engine, you have your order books. So you have a lot of components. So what tends to happen is that a lot of people, by decentralize any one component of it, they'll just call themselves DEX, right? And then there will be people like MarginX, where we try to decentralize everything, makes life difficult for ourselves, and we still call ourselves DEX, and it's not very clear what's the difference between one DEX to another DEX. So, and then there's a spectrum of all these things, right? From SEXs to DEXs. It's not a black and white issue. It's more like a spectrum of colors. So the question that always come about when we were presenting at the FinTech Festival was that whether we believe DEX is going to one day take over sex, because obviously philosophy aside, there's some technical issues that we will probably never surpass a sex. Although some people would argue that we don't know what's going to happen in 2 years, because 2 years ago maybe we in just about 6 months everything changes in the blockchain sphere. So yeah, it's a fair assessment that we don't know whether in 2 years' time someone would come up with something smart that allow DEXs to surpass sexes. But as what we can see right now, the alluring part of DEX is not so much on its speed and its user friendliness, but more about its philosophy on having you full custody of your own funds, or at least, as you mentioned, there's no such thing as full decentralized, or at least maximum custody, right, of your own funds.
Yeah.
Right? We try much as possible not to touch your funds, that all these settlements and all this trading doesn't go through any third party, that if you go bust, you still have your money in your wallet, we don't take any of it. But at the end of the day, someone still owns the blockchain, right? It's not unlikely, but if it goes down, your wallet still goes down. So I guess in the past, we even have a Twitter space to talk about this. And I think at the end of the day, most of the speakers agree that at least in the foreseeable future, sexes and DEXs will complement each other rather than one taking over another. I wanted to ask this as a question, but I don't think anyone has an answer. But feel free to contradict. I was really wondering, anyone here believe that one day DEXs is going to be bigger than sex, right? With Coinbase and Binance having so much problem, and everyone thinks that it's an opportunity for DEX, but is DEX really going to one day take over sexes? I mean, that's definitely the aspiration on MarginX, right? One day will be as big, if not bigger, than Binance. However far that dream is, but is that even possible? Because we see what happens with SEC and Coinbase last weekend, but the investment in DeFi is still all-time low, right? So so for me, it's more of a question, something that I see rather. Sorry, I'm not giving any answers, but I'm just sharing. What you just said really triggered all this thing that I've been thinking. well, every night before. Anyway.
No, it's great, like, to hear your thoughts, right? I mean, especially from someone who's really aiming for decentralization, right? So to me, that's valuable input. And I'd say, like, how I kind of perceive that response would be, decentralization is directly related to the capability to enforce, right? I mean, the more decentralized you are, the harder it is to enforce. So therefore, regulation will have less and less impact on something that's harder to regulate, right? So that's actually the thing I feel that is going to impact the growth of DEXs, right? If DEXs are going to be the things that take over, it'll probably be an effect or a product of the attempts at enforcing regulation. And I say attempts here because enforcing regulation is very, very difficult. Creating it is easy, but enforcement is very expensive and very slow, right? So the harder it is, the less steam people will have in enforcing it. But the pressure to adopt DEXs probably is going to come from two things, right? One is the desire to control your own assets, right? And if you feel that's very, very important, that you have all the control and you're not willing to let go any of that to a third party, and then one day not be able to log into the DEX or your wallet to be able to get your funds, if that's super important to you, yes, that is a force for adoption for a DEX. But we know the reality is most people are willing to compromise on these things, right? And many people don't even see the compromise, right? So that's part of the issue here. But overriding that, the thing that would push everybody in the direction of DEXs would be prohibitive regulation, right? If regulation is inefficient or it does not give people access to these financial services, that's the thing that's going to be able to like drive the adoption of DEXs, I feel.
Yeah, I actually have something I wanted to share. I mean, I don't really have much evidence to what I'm going to say, but my opinion is that once crypto is more widely used and decentralized wallets are more like, your wallet, it will be so much easier for people to get onto a DEX trade, because you just have to connect a wallet, which is essentially an extension of your arm by then. And that is kind of the future that I see very possible, especially as more countries are allowing for crypto to be used on a daily basis. And for me, like, I have my FX wallet. I just I now that's gonna be my main wallet, and then when I feel like buying a spot or like even a perps, I can just go onto my laptop and then connect and then just buy. It's so easy, much easier than if I were to sign up on a centralized exchange. I feel like, actually thinking about it, the DEXs have less friction once crypto is more widely used. Yeah, but I mean, correct me if I'm wrong. That's just my humble idea.
Well,
I
I'm listening to
yeah.
you, and I'd agree. Sorry, I'll
No,
let
no,
you
no.
finish.
Go ahead. No, please.
All right. Okay, so my takeaway from what you're saying is that for the average user, there should be no distinction between, in terms of UX, right? There shouldn't be a distinction between the wallet and the DEX, right? It's like an app. I open my app and I can do stuff, right? I can swap, I can buy, I can do, and I can see it all in my app. So that way, it's not all in different pieces, right? It's all in a single experience, right? It's a thing on my phone. I open the app and I can do stuff on it, right? You may have like MarginX under the skin or Uniswap under the skin, and I don't necessarily need to see all that stuff. I can just do what I want, right? I think that if we had that as a user experience, yes, it's a pretty powerful thing.
Yeah, exactly. It's
Mm,
like
mm.
it's like now we use our phones for everything. We use it for GPay. Yeah, we use it for messages. Yeah, I mean I see that as a potential for crypto wallets in the future. Um I I we are kind of like uh reaching the end of our discussion. So I just wanted to um ask Jemmy if she has any opinion on this to kind of wrap up our conversation today.
Sorry, your voice kind of cut off a little bit, but I just want to say back to the ZAX or DAX or regulation that we are facing today. I will say DAX definitely have an advantage because everything is open public information. You don't need to, understand coding now that we have ChatGPT. If you want to check out the stuff, if it's secure and anything, we could just go to GitHub and paste it to ChatGPT, and we could use tools to know which wallet is connected to each other. So I love the transparency aspect of things, but we do need SACs to complement each other. And I think regulation will only affect SACs. Yeah, that's the summary that I've got for this discussion.
All right. Thank you so much. We have come to the end of our discussion today, but I just wanted to say thank you to both Mu and Jemmy. I think your insight was very, very it was really interesting to listen. I think our discussion was very fruitful today, and I I definitely learned a lot of things just from listening to you guys. I hope you guys had fun too, and I hope that all the listeners who tuned in learned something new. So with that, I wanted to remind everyone, don't forget to follow all our speakers and on Twitter, Jemmy and Mo, and also follow MarginX so that you know when our next Twitter space will be. Thank you.
Thanks a lot
you.
to Jamie.
Thank you.
Thank you very much. Thanks for having me.
Thanks for having me too. It's been a great talk with you guys.
Yeah.
It was great.
Thank you.
Bye.
Bye.
Okay, see you guys.
Bye.